So in today's video, what I want to talk about is what happens when your company gives you a company car but also pays for the fuel on it, and what the alternative to that actually is. So a lot of people get company cars, and depending on the company car, the type of car, electric, petrol, diesel, size of engine, hybrids as well, you could end up paying different levels of benefit in kind tax. So that's where the HMRC say you've received a benefit from your business instead of being paid a salary, so we're going to tax you as if you'd been paid a salary for that amount, but the amount that it's determined on will depend on the emissions of the vehicle. A lot of people are quite familiar with that, and especially if you've got an electric car, you might still be putting it through the business because the actual tax, the benefit in kind tax on an electric car is quite low, whereas if you've got like a diesel or petrol car and it's got a large engine, you might actually be thinking twice about putting it through your business because the company car tax on that is actually quite high. And quite often it makes sense to own that vehicle yourself and just get paid a higher salary to pay for that vehicle. But I'm not going to go into that. That's not what this video is about. What this video is about is when you do have a company car, how is the fuel paid for? So really there are two options here, and I'm going to start with probably the least common but the one that seems to be cropping up a lot at the moment. And that is where the company actually pays for the fuel for your vehicle. So a lot of the time people think it is just as simple as, hey, I've got a company car, I do pay company car tax on it, but that means the company can now pay for all my fuel as well. Well, it's not quite that simple, because what you actually have is something called fuel benefit tax as well. So if you thought the company car tax was bad enough, then in addition, if your company pays for your fuel, you get a fuel benefit tax on top of it. And the reason that tax exists is quite often because there's an assumption that if you've got a company car and the company is paying for the fuel, a lot of that fuel that the company is paying for is probably used for personal use and commuting to work. And that's why the government says, well, you shouldn't just be able to get that fuel completely for free, because if you were paying for it yourself, you'd only be able to claim mileage on the amount that was related to business journeys. So why is it fair if you get all your fuel paid for that you don't pay any tax on that at all, and you get tax relief on the full amount? So that's where company fuel benefit comes in. So like typically if you're paying about $3.5 grand for company car tax, you might pay another $1,800 for company car fuel benefit, and that just increases your bill. The alternative to doing this is actually not getting the company to pay for your fuel. I know if you're an employee and not the director of the business, this might not seem very appealing, but the alternative is the company doesn't pay for the fuel on your company car. What you do is you pay for it yourself, keep a mileage log for any business related journeys that you've done, and then you get the company to reimburse you for those business related journeys. You might have heard about the 45p a mile rate. Well, the 45p a mile rate only applies if you're using your own vehicle, and by the way, it's up to your employer. Doesn't have to pay you the full 45p a mile, but it's up to you, but in terms of tax relief. But when you've got your company car, you're not going to get the 45p a mile rate unless your employer is really generous, because they're already supplying you with a vehicle. They're already paying for your wear and tear, the servicing, maintenance, insurance on it. So why should they pay you again through giving you the full mileage rate? So what they actually do is they use a system called the advisory fuel rate system, where HMRC say, if you've got this type of car, this is how much money you can claim per mile. And once again, that's what the tax relief is based on, but actually employers are at their discretion to increase the amount if they feel that the advisory fuel rate for that type of car and the actual consumption of fuel isn't sufficient or is too high. But in reality, that's what people do. They'd keep a mileage log and then submit an expense claim just for the fuel element. The company will then pay them that expense claim, and then the company will save money on that as a corporation tax saving. And because there's VAT on fuel, they'll also get VAT back on that mileage as well. So a little bit more complex, but it comes up time after time. One of the biggest points of confusion at the moment is when the company is paying for the fuel, but then the employee is also expecting to be reimbursed for the business mileage. Well, that would be double counting it. Or when an employee is being expecting to be reimbursed at the 45p a mile rate, well, that would be double counting it as well. So just to manage expectations, to help people understand how this works, that is how it works. If you want to find out more, get in touch with me, and I'll see you at the next video.